Hell yeah, I got the chart of the day up because I'm going to make money on this chart. Now, as you can see, and I'm not going to share the stock name yet, but I will as you stick with me about 5 minutes in. But as you can see, huge outflow for 2 of the last 4 days, 2 of the last 5 days. Inflow, very small. Stock seems to be holding its own. If the markets give up, so will this stock. So that's what I'm going to share with you. But let's talk about what's going on in the market first and what to expect. Because I am expecting a nice size bounce sometime relatively soon. And when I say a nice size bounce, I mean 3% to the upside. However, the markets could easily drop 3% to the downside before they go up. So let's talk about what's going on in the markets. Tech is down 27% this year, actually 28% this year. All right, Netflix is coming up with a less expensive option. So Netflix is currently $180. It has support at 177. So there are certain stocks on your watch list, on my watch list, that have support. So I'm telling you, Netflix has support at 177. Point is, if that's only a 2% drop lower, then we almost might have found the bottom of the market, because the SPY right now, I'm going to take out my SPY chart, and here's what I brought up for the day. Before I start mentioning everything else, for people that are here, understand the SPY trades between a range. If you're bullish on a position and you're buying calls of whatever stock, AMD, NVIDIA, Exxon, who cares? You have to make sure the SPY looks like it's going up, because if the markets are not going up, your call value will go down, okay? So that's when I talk about entry point being most important. Same with puts. If you can see the SPY is going up and you're buying puts and the SPY continues to go up, your stocks are going to continue to go up. Your puts are going to be worth less money. So let's talk about the SPY real quick, and that'll help you figure out the perfect entry points. So I mentioned the SPY likes to trade in between a 9 and 10 point range. Very simple, 9 or 10 point. Let's just go with 10 point range. That way you say if the low on the SPY was 390, the high for the day should be 400. It's easy. You add or subtract 10 points. So I've got my scenario. My bullish scenario is on the downside, we see 391 on the SPY today. Now, again, we're like 390, 3 pre-market, something like that, or that's where it closed. So again, limited downside, upside, 400 will be a key number, okay? So you know, hey, shit, I'm going to be bullish. The market dropped like it usually does in the morning. It goes down, and then it quickly recovers, and then it goes higher. If that's your bullish scenario, 391 is going to be the low side, 400 on the high side. Now, let's reverse that. Let's say today is a shitty freaking day in the market. Why? Because you got a Fed speaker coming out this morning. You've got minutes from last week's Fed meeting coming out at 2 or 2:30 today. And then tomorrow morning, you have GDP, which is why I believe the market end of day, I'll be doing puts again. Okay, but downside. So you say, okay, maybe 395 is the high end of the SPY. If the SPY trades a 10-point range, then we could actually go down to 385. Okay, so you're understanding the range. Now, what's most common? That's the median right here. 388 on the downside, because I mentioned institutions have supported the SPY at 388. So 388 on the downside. If we go 9 or 10 points higher, you're saying 397 or 398. So that's an easy way to trade the market. What you say is when the SPY goes to 388, Matt said we're going to have a bounce. We saw the bounce yesterday. We saw the bounce the day before. I'm going to SPY calls. And don't get yourself in trouble. We're Wednesday. So I want you to go out to like next Wednesday, next Monday. You don't want to screw yourself by trading same day options. So I was talking about my biggest mistakes to my platform. Okay. My biggest mistakes last year. So it's always been that I don't give myself enough time. I'm buying an option that's 3 days to expiration. It has a market has a terrible last 3 days of the week. My shit ends up down. I sell for a loss. The next week, Monday, Tuesday, it bounces back, and my shit's up 10%, the stock, so I would have been up 100%. But instead, I sold for a loss. So please, options traders, rule number 1, give yourself enough time. Rule number 1 also, entry point is most important. If you don't understand that, say the SPY is trading, this is the permanent marker I use. Let's say the SPY is between 396 and 392, which is support and a ceiling, support and a ceiling. So the SPY's at 394. Well, shit, you don't know if it's going down to 392 or up to 396. So you can't enter puts or calls. Next rule, you cannot trade before 10:30 a.m. Why? Look at the options you're looking at buying. The bid is, let's say, 64 cents. The ask is $1.02, okay? There's a huge 38-cent spread there. So when you go to middle it and you're like, I'll buy the contract for 80 cents, I'm going to be right on the day. Even if you're correct on the day, you're going to go back an hour or two later at 10:30, 10:45, and you're going to be like, let me see what the spreads are. And it's going to be 65 to 70 cents. You paid 82 cents. You're down 14%, and you're correct about the stock price and the stock movement. So that's ways that you could basically screw yourself. So again, for me, I like to wait. We have a trader on my platform that says to me, dude, I do the same thing every day and I lose money. I lose money. I said to him, history repeats itself. No matter if we're talking about the market or you're trading, if you keep doing the same shit, again, I'll be the guinea pig. Carlos wanted to cut me off from trading before 10:30 a.m. because I go in way too strong. He's made his point so clear to me that I don't trade before 10:30 a.m. anymore. I just don't do it. There's no reason to. In fact, the majority of the trading happens, you'll see it in the market, from 3 p.m. to 4 p.m. Let's go back till Friday. Friday, we spiked on the SPY, end of day. Monday, right? Or no, Tuesday, I waited and the SPY finally dropped, end of day. All right, let's keep talking about the markets. So I talked about Netflix. Oh, let's talk about that trade of the day. Here it is. Let me bring this shit up. All right, so here's the stock of the day. I'll share it with you guys. It is Caterpillar. Now, here's my reason for making Caterpillar. You can see it's basically flat pre-market. It's 205.54. It's down 11 cents. So while I have that chart up, I'm going to bring down the volume and the demand, and then we're going to talk about Caterpillar first. So Caterpillar, lots of sales coming from where? China. What did President Xi say this morning? He said China is still going to struggle. What did Powell say about the U.S.? He said the U.S. is still bracing for more pain in the market. Okay, so now we're told that China is going to struggle. Caterpillar sells a lot of their big freaking trucks overseas and their equipment. I mean, it's an important thing. It's just like you're looking at XLE, right? Which is the energy index. We need energy, so energy is going to keep going up, and there is demand for Caterpillar. But if China suffers, this stock will go down. And again, I'm pointing out the outflow days, 2 out of the past 5 days. If we have a big outflow day, big volume, and let me go to the volume so you can follow along. All right, on the outflow day, 5 million shares, 5.5, close to 5 million shares. Let's look at the inflow day from yesterday. Half of that, 2.5 million, 2.2 million, 2.5 million, 2.8 million. So if we have a 5 million share outflow day, all right, Caterpillar could drop to its 5-day low. So it would not surprise me if we see Caterpillar at 195 or 196, which is down 10 points. So again, here's how I position myself for today's market, okay? I'm looking and I say, if the market spikes up at open and tends to roll over, you know what, let me see if I can pull up one more chart with a pen. Ah, great, I still have some room here because I'll show you exactly what I expect the two scenarios in the market. And we've seen these the past couple days. So the market opens wherever it is. It goes up, it comes down, it goes even higher, and then it comes over. All right, so here it is. The market opens here, it goes up, it comes down a little because nothing goes straight up, and it goes even higher. And you're thinking the market should go down. Why is the market up 200 or 300 points? And we've seen this over and over and over again. And then what happens the rest of the day? The market gives back, finally turns negative, and then might end green. Shit, we saw it yesterday too. The market was strong. The market turned red. And then at the end, you saw tech finish green. No, Dow finished green, and tech was making its way back up, but still red. So that's kind of what I'm expecting today. So what I'm expecting is when we hit this value, now whatever this could be, this is probably going to be like 396. Why? Because 396 is a ceiling. It's resistance. So if it breaks 396, then I will look for my first scenario, SPY to 400. If it gets rejected at 396, I will look for my second scenario, which is 396 or 395 will be the top, and we could possibly go down to 388. But I know if we go down from here, let's say 396, that we will probably hit 388. We don't need to go to 385. 388 is a big support. 388 is also it's a good place to get a solid call options. However, I'm still following the same guidelines that I've been doing for now 5 straight weeks. And yes, Love has been doing this for like 7 straight weeks. she's been selling or buying puts on every market spike. Now, one day it will burn us in the butt, but until history shows us anything different, and I mentioned that because in the bullish scenario, I think the SPY could go 401 today if I were a bull in the market. But again, GDP numbers coming out tomorrow. So that's the apprehension for taking a bullish sentiment. Plus, history repeats itself. So I keep buying puts at the top on the SPY. I almost did it yesterday. I was talking about it after I made my morning trades yesterday, and I said, I'm looking to buy puts on the SPY at 394 end of day. This is when the SPY was still 389, and I rode the SPY up from 389 to 392. I didn't even go all the way up to 394 because I mentioned I had to pick up my kids. So another lesson, when you can't focus laser accuracy on the market, when you don't have time to prepare your trade, like, okay, I want to enter at 80 cents. Instead, let me take 20% off that because I missed by 20%. So you put in your bid 80 cents, you're like, okay, 72, $64, blah, blah, blah. Then you turn off your phone. That's it. That's your nibble, okay? Unless you're perfect at calling the bottom. And I am far from perfect. In fact, I come up with most of my Discord alerts for. I'm usually watch a trade that I mentioned, and then I wait for it to drop about 10%. When I'm down 10%, because I know I missed the bottom by about 10 to 12%, I say, okay, this one looks good. And then sometimes 5-minute rule, it drops even lower and people get in better. Okay, so let me just see. So again, China has more issues. The other thing that I haven't spoke about yet is what's going on. So we know Biden is overseas in Japan. Biden misspoke or overspoke, and he said we will support Taiwan with military action if needed. And then the White House goes and they retract it. What he meant to say is we would send supplies there the same way we're sending supplies for Ukraine. I mean, I appreciate the fact that the president says what he's thinking. It upsets me when the White House changes course and says, no, we don't want to do that, because President Xi responded and the Chinese consulate responded, and they said, U.S. is getting itself in hot water by saying these things and should abstain from these comments. So we have that going on. We have Apple mention that they're not exiting out of China, but they're finding suppliers in India, in Pakistan, in other Asian countries, so they don't have to predominantly rely on China. And then you have the lockdowns, which finally ended in Shanghai a couple of weeks ago, but understood. These are all the electric vehicle fans. Who's a fan of Lucid, Tesla? You're here. Understand this. Shanghai sold 0 vehicles in April. In fact, this morning, instead of live, I was going to come on and shoot a video about Tesla, because if we look at Tesla's PE, all right, and this is the point of the video, it's at 82 right now. Its forward PE is at 52. Google's PE, Amazon, Facebook, all these PEs of major companies in the SPY are somewhere between 18 and 20. So you say to yourself, okay, I get it. Tesla's not an average company, but should Tesla be worth 2 times as much as a Google that brings in money? Or, that's how they rank these companies based on their valuations, based on their PEs. So my thought process is, well, shit, Tesla's PE could definitely come down, their forward PE, to something around 33 or 34. Now, if Tesla's forward PE is 33 or 34, that means the stock will drop another 33%. So we know how Elon loves the number 420. Well, yes, Tesla stock might go to 420, and I'll be talking about that. Another thing, Twitter. Now, some of you might want to take a risk on Twitter. Why? Because Twitter has to close by July, and it's the whisper on Wall Street that Elon's probably going to reduce his offer, but still make it something like 420 or 4020, something like that. And if you look at Tesla stock, Twitter stock, it's at like $35. So you could play options, July calls at like $35. You probably pay a few dollars. When it spikes sooner than that, you'll make about 50%. Just a trading idea. Okay. I seem to get in a little late. I'm off 15%. I said 15% lower, and I rarely go red anymore. Yeah, that's it. So I made a whole video on that. It's such a great thing that you realize what you're off. Okay, so let's talk about a positive catalyst for the market. Everybody's like, Matt is such a bear. What can make the market go up? I've got one thing right here, and I tweeted it out this morning, and I took it from both Zero Hedges and Walter Bloomberg, 2 people I follow on Twitter. Fed swaps no longer fully priced 2 half-point rates by July. Okay? So the Fed swaps is how Wall Street gauges, okay, the interest rate hikes that are coming. Because we hear the Fed speak how they're hawkish. We're going to do 50 basis points. They already said it in June, 50 in July, and probably 50 either in September or November. But now the Fed swaps, which is your gauge, it basically tells you the percentage. So it's probably like over 60% that the Fed will not raise interest rates 50 basis points in both June and July. With that said, the market, when they figure this out, it will be a bullish sentiment. So again, it's going to be extremely volatile today. You've got GDP coming out tomorrow, and then you've got the Fed, who's more than likely not to raise interest rates 50 basis points in June, 50 in July. So that's the conundrum, because one thing is bullish for the market, one thing is bearish for the market. I'm expecting a huge move soon, like a 4 or 5% day. I just can't tell you whether it's going up or down. So we'll end on that note, because here's what I wanted to tell you guys. You have analysts on Wall Street, and I saw this on CNBC yesterday, analysts on Wall Street who cannot explain the movement in the stock market. So you have you, me, with the retail trader, who sometimes we think we're pretty smart. You have analysts on Wall Street who cannot explain the movement of the market right now, because they're expecting up and it goes down, or they're expecting down and it goes up. So when you get confused or you're feeling confused about the market, don't be. The market is there to trick you. Market Rebellion tweeted out yesterday, Wall Street was created to take money from you, not to give you money or allow you to make money. They're there, and I say they're there to steal from you. But understand that. So again, I've talked to you about the SPY today. I just want to see if anything else is going on. My strategy hasn't changed. Puts at the top. Let's have a great day of trading. We got to get into it. I'm going to get out on Discord now. 349 Trading. Thank you, everybody, for watching. I'll see you guys later.